Welcome back to our training series on AI prompting for content creation in investment management and finance. In our first session, we introduced the 4 pillars of prompting: context, role, clarity, and constraints with outcomes. In our second session, we explored and compared the models that respond to prompts, general-purpose systems like ChatGPT and Claude, and finance-specific platforms such as Fiscal.ai and Kavout. Today, we bring those lessons together with a practical question. What makes a prompt bad? Weak prompts waste time. Strong prompts, built on the 4 pillars, save time. Let's look at a few examples. Suppose you type, "Write about market risks." This is a weak prompt because it fails key pillars. No role. The voice isn't set, for example, an analyst, journalist, or a portfolio manager. No context. No time frame, for example, the third quarter, last year, or a forward outlook. No clarity. The scope is vague: equities, rates, credit, commodities, global or regional. No constraints or outcomes. No word count, format, sources, or defined deliverable. The output defaults to a generic definition of market risks, broad economic shifts affecting most assets, with lists of equity, interest rate, currency, and commodity risks, plus geopolitics and policy, and generic mitigations, asset allocation, hedging, monitoring. It may sound polished, but it lacks scope and a concrete deliverable, so it isn't useful for a quarterly report. Here the 4 pillars are applied. The AI now knows the role, context, clarity of scope, and constraints on format. The result is a structured draft, far closer to what you'd use in practice. Here's another case. A vague prompt might be, "Summarize Company X's earnings." Again, it fails the pillars. No context. Which quarter are we talking about? No role. Should the AI write like an analyst, a journalist, or a PR team? No constraints. Should the output be a 1-page note, bullet points, or a headline summary? The output becomes shallow. Company X reported earnings. Revenue rose, expenses increased. Not something you'd send to investors. Now let's fix it. Act as an equity analyst. Prepare a 200-word earnings note on Company X's Q3 results for a client newsletter. Highlight revenue growth, margin trends, and management guidance. Present 3 bullet points and include 2 to 3 references to the earnings release and call transcript. Flag any figures you cannot verify. This is a clear, structured prompt. The 4 pillars guide the AI to produce concise, professional content tailored for investors. Next, we look at a classic weak prompt. Is Apple a good investment? It sounds reasonable, but it fails our 4 pillars. There's no role, so you'll likely get opinion. No context, no time frame or peer set. No clarity on which metrics matter. And no constraints on format or sources. The result: generalities. Let's upgrade it. Act as a buy-side associate. Produce a relative valuation snapshot for Apple stock versus Microsoft stock using trailing price to earnings and price earnings to growth ratio, PEG. Deliver a 120-word brief plus a 3-row table. State data sources, company filings or reputable vendors, and the as of date. Add 1 sentence on why multiples differ. If sources conflict, note the discrepancy. Now watch what happens. Role shifts the tone to analytical. Context pins us to the last 12 months and a defined peer. Clarity locks in the metrics. And constraints force a short brief, a table, and sources, so the output is comparable, auditable, and decision useful, not hand-waving. This is the difference between opinion and analysis you can defend. For the final example, consider rate sensitivity. Broad prompts such as, "How do interest rates affect stocks?" tend to produce encyclopedic explanations, not portfolio analysis. They lack context, no regime or dates, role, clarity, which segments, and constraints, format and citations. Here's the stronger version. Act as a portfolio strategist. Analyze rising rate impacts on growth versus value using the periods between 2004 to 2006 and 2016 to 2018 as anchors. Deliver 3 bullets: performance pattern, earnings sensitivity, duration of cash flows, and end with 1 positioning implication. Cite official macro sources with titles and dates. Now the model works like a colleague. Role frames a portfolio lens. Context sets specific historical anchors. Clarity defines the angles to cover. And constraints require concise bullets plus a practical implication. You get a focused comparison, not a textbook summary, showing how style factors behaved in prior hiking cycles and what that might mean today for positioning. The lesson is simple. Bad prompts ignore the 4 pillars. They're vague, unfocused, and produce generic filler. Effective prompts apply the 4 pillars: role, context, clarity, and constraints with outcomes, and transform AI into a professional partner for quarterly reviews and earnings notes. In our next session, we'll put this into practice with a live case study. Step by step, you'll see how a weak draft evolves into professional analysis by applying the 4 pillars. See you then.